Whether you believe the bull run is here or not, there's no denying ChainLink, or Link for short, has been the star of the show in the last few weeks. Now, despite being around since 2017, most people aren't too familiar with Link. Link is somewhat a bit of an OG coin, very familiar to investors around in the early days of cryptocurrency, but not so much to those who started their crypto journey in 2020 and 21, where the narrative was all about the metaverse. In this video, we're going to dive into number 1, what is ChainLink, number 2, ChainLink in the real world, and number 3, price predictions. So what is ChainLink? Well, ChainLink is a decentralized Oracle network that enables smart contracts to securely access off-chain data feeds, web APIs, enterprise systems, cloud services, IoT devices, payment systems, other blockchains, and much more. It essentially acts as a bridge between the blockchain and the outside world, allowing smart contracts to access external data and events. In simple terms, ChainLink is a technology that helps smart contracts talk to the outside world. Now, if you don't know what smart contracts are, blockchain smart contracts are programs that automatically execute when certain conditions are met. They are capable of completely changing the way we value and transact information in our society by creating systems that give individuals more autonomy in the way they interact with products and services. But of course, there's a catch. Smart contracts can only be as useful as the data they're fed. Therefore, they require access to trustworthy data sources. Now, that's where ChainLink comes in. By connecting smart contracts to external data sources, ChainLink allows for new and exciting blockchain use cases that were once thought impossible, but we'll touch on that more later. Now, who are the ChainLink founders? Well, ChainLink is the product of a blockchain-focused technology startup called Smart Contract, which was founded in 2014 after receiving investment from the San Fran-based investment group Data Collective. Sergey Nazarov is the CEO and founder of the company. Sergey has a history in the space as the founder of the cryptocurrency exchange Secure Asset Exchange. He also founded a completely decentralized email service called Crypto Mail. Steve Illis is the CTO and co-founder of the company. Steve worked with Sergey before on the Secure Asset Exchange platform. He is also an experienced software engineer, having worked at Pivotal Labs prior to joining the blockchain world. Another important founding member of the ChainLink team is Ari Jules, who helped write the ChainLink white paper. A computer science professor at Cornell Tech, ChainLink held an initial coin offering, also referred to as an ICO, in September 2017, raising $32 million with a total supply of 1 billion Link tokens created. Following the ChainLink ICO, 35% of Link tokens were sent to node operators to jumpstart the incentivization of the decentralized Oracle network, and 30% stayed with the ChainLink team in order to fund future development. ChainLink looks to solve what we call the Oracle problem. One of blockchain's most important use cases is allowing 2 or more parties to safely exchange data or even value data without the use of an intermediary. This is all made possible by smart contracts, which we've discussed earlier in the video. The problem is smart contracts need to have reliable and decentralized ways to access real-world data, such as the weather, news events, and prices. If the data feeding into the smart contract is incorrect or corrupt, the outcome of the smart contract will also be incorrect. Now, if smart contracts rely on a centralized source of data, it is much more likely that the data source can be manipulated or even compromised. And this is known as the Oracle problem. To give an example, let's imagine a smart contract which is programmed to release $100 worth of Bitcoin to an individual when the contract receives $100 worth of an Ethereum. The contract needs to be able to receive data that can accurately tell it what prices of BTC and ETH are. Otherwise, it will either not dispense the amount of correct BTC, or number 2, dispense no BTC at all. Now, how does ChainLink solve the Oracle problem? To solve the Oracle problem, ChainLink created a decentralized network that acts as a bridge between smart contracts and the external data sources. Instead of trusting a central authority to moderate data, ChainLink maintains an Ethereum-based decentralized network of node operators in which participants are incentivized to verify data and feed it back to the smart contract. A key part of this is ChainLink's reputation system, which rates oracles based on a different number of performance metrics such as uptime, response time, and how many jobs they have successfully completed in the past. Smart contracts which are seeking trustless data from an off-chain source, such as web APIs, IoT sensors, and much more, can send Chainlink a query to create a job for a node. To be eligible to fulfill jobs and receive rewards, Chainlink nodes need to buy link tokens and lock them up as collateral. If nodes feed bad or incorrect data to the smart contract, they will lose a portion or if not all of that collateral. However, if they act correctly, they will have their collateral returned and receive a reward. So what gives Chainlink actual value? Well, as mentioned, buying link and locking it up into the ecosystem allows an individual to run a node in which rewards are distributed based on performance. Owning more tokens means access to bigger and more rewarding data contracts, and all rewards are paid out in Link. As a result, the value of Link is largely dependent on the desire of operators to accumulate more Link in order to run more nodes. Now, what are the top 5 use cases when it comes to Chainlink? So number 1 is stablecoins. Stablecoins are cryptocurrencies that aim to hold a fixed exchange rate against other currencies and assets such as the US dollar, other cryptocurrencies, or even precious metals. Some of the most popular stablecoins include USDT and USDC, which aim to trade one-to-one against the US dollar and are backed by real US dollars in bank accounts. In order to keep their peg, stablecoins need an accurate way to track the value of their underlying asset, and Chainlink offers decentralized price feeds of all major assets, enabling stablecoins to maintain the integrity when it comes to reserve ratios in real time. Number 2, on-chain reserve monitoring. So cryptocurrencies that are based on one blockchain can be ported over to other blockchains if they're wrapped, aka locked in a vault in their native blockchain, then re-represented with a one-to-one token that circulates on the other blockchain. Wrapped Bitcoin, or WBTC, is the most popular ported token, with tens of thousands of BTC locked in a reserve on the Bitcoin blockchain, but currently circulating on the Ethereum blockchain. Chainlink actively monitors the reserves of both blockchains to make sure all the wrapped BTC tokens stay fully collateralized at all times. This opens up the liquidity of cryptocurrencies beyond their own ecosystem. Number 3, decentralized finance. Unlike traditional finance, decentralized finance, or DeFi, enables anyone with an interest to be able to borrow, lend, and earn interest on almost any asset. The global DeFi market has exploded over the past few years, with the amount of capital deposited in DeFi platforms increasing from 500 million in March 2020 to over 40 billion today. But these systems to function without central parties that moderate collateral levels, interest rates, and currency values, they use a decentralized Oracle solution like Chainlink to access reliable market data. Number 4, yield farming. One of the most popular buzzwords within DeFi is yield farming, the process of depositing crypto assets into a liquidity pool and earning interest on them. But in the past, bad actors have used price feeds as an attack vector to exploit protocols that pool assets together. So if bad actors can manipulate the data feeding into pools, they can change the outcomes of how and where the pools distribute funds. Several DeFi protocols are using Chainlink to provide tamper-proof price feeds and track the value of deposits, ensuring users receive the correct amount of yield and remain protected from losses. Number 5, supply chain. Supply chain was one of the earliest industries to begin experimenting with smart contract systems, using the technology to record the movement of goods on a decentralized ledger where all information remains open and transparent, while being updated in real time. As goods progress through the various stages of their journey and move from one location to another, smart contracts need to be able to interact with external data sources like APIs, IoT centers, and data feeds. Chainlink oracles can connect smart contracts to these sources in a decentralized and tamper-proof way. So the big money question, or I should say the second big money question of this video, what about partnerships? Well, Chainlink was actually recognized by the World Economic Forum. The forum named Chainlink in its 100 most promising technology pioneers of 2020. But it doesn't stop there. There are currently around 2,000 partnership projects being worked on within the Chainlink ecosystem, and one of the biggest names floating in that list is SWIFT. The Society for Worldwide Interbank Financial Telecommunications, or SWIFT for short, powers most international money and security transfers. SWIFT is a vast messaging network used by financial institutions to quickly, accurately, and securely send and receive information, such as money transfers. SWIFT essentially handles over 5 billion transactions yearly. 5 billion. ChainLink have been working with Swift to test how they can connect with multiple blockchain networks. The goal is to test how institutions can use Swift's infrastructure to instruct the transfer of tokenized assets across blockchain. ChainLink will provide connectivity across both public and private blockchains for these experiments. Now, this is a fun fact. Have you heard of G-Link? G-Link, or Greyscale Link Trust, is a regulated product in the US. Investors can gain exposure to Link on the stock market. That's right, they can buy cryptocurrency on the US stock market. How is that not mainstream news? G-Link is trading at a 300% premium compared to the spot price of crypto, which just shows the institutional demand for this product. Now, the G-Link product was released in May 2022 and holds about 32,000 Link. Historically, this US stock market product has always traded at a premium compared to the crypto spot price of 20%. However, the current premium of 300% is the highest we've ever seen. Something is definitely cooking behind the scenes. Now, the question most people click on the video for: what about price action? Where is Link gonna head into the future? At the time of recording this video, Link is sitting at around $15 with a market cap of $8.4 billion. Link's previous all-time high was around $52 to $58 depending on the exchange being used. This was back in May 2021, in which Link hit a market cap of $21 billion. Back in May, when we hit this all-time high, Link was only the 11th largest coin by market cap, trailing behind questionable coins such as Litecoin, Polkadot, XRP, Cardano, and the infamous Dogecoin. Now, it's all a matter of opinion whether you believe Link is better than the listed projects which obtained higher market caps back in 2021. But if I'm honest, if Cardano was able to hit a market cap of $56 billion, it's a solid argument that Link has a much higher fundamental behind it to outshine Cardano. And I'm hoping I don't get Cardano hate in the comments, because I will admit I do have a bit of Cardano in my portfolio. Now, this is the potential price Link could hit if it was able to reach the same market cap as the coins I just listed back in 2021. Of course, this is not financial advice and purely speculative based on historical data. Now, what about my personal holdings? Well, personally, I do hold about 20% of Link in my portfolio, in which I'll be aiming to sell half of my holdings in staggered amounts up to the previous all-time high of $50, and that's even if we hit $50 again. But if the market rises and we're in the bull run, most coins will hit their previous all-time highs. I think it's always important to set take profits based on actual historical price points rather than made-up numbers, which a lot of other YouTubers just shout out for more views. The truth is, I could easily shout, never sell your Link, Link to the moon, $500 incoming, Swift will make Link unstoppable, we're all gonna be millionaires, for more views and subscribers. But the truth is, that type of mentality leads to poor decision making, and that's how you lose money. That's how you become trapped in the crypto cycle. You need to follow the actual numbers you can see on the charts and in the data, not made up numbers by YouTubers still living in their parents' house. Over 50% of my crypto portfolio I will sell at previous all-time highs or previous price points, because you don't know how high that ceiling is, or on the flip side, how low that ceiling could be. Hope you enjoyed the video. Let me know in the comments what you think about Link, if you're holding it, what your plans are, and make sure you like and sub for more videos in the future.